The CPI is coming down, yet interest rates are going up. Why? Let's dig into it. So the CPI is at 5%. It's low in over 9 months, yet interest rates have scaled over 0.5% in the month of April. According to Mortgage News Daily, interest rates are now at 6.75%, up 0.5% from earlier this month. Why, when all the reports continue to show that CPI is coming down and that jobless claims are going up? I'm here to tell you not to get discouraged. We have to continue to look at the data and hope that data doesn't lie. The data continues to point that May, June, and July are the months that we've been waiting for a possible relief in mortgage interest rates. Well, again, we know on May 10th that CPI is going to come down again. We do extensive research on the CPI month in and month out. So at 5% right now, we know over the course of the next 3 months, that number is going to come down drastically. We're probably going to be around 3% around August. So that's not quite where the Fed wants to be. The Fed always wants that 2% target, but we're still going to be significantly better. Remember, just 9 months ago, we were over 9%. In 3 months' time, we're going to be around the 3% range, which is a significant improvement. In addition, jobless claims, we see that it's starting to go up. We're seeing more of a bend, not a break in the U.S. labor force. However, this should also continue to increase over the next 3 months, which will then slow down the Fed in hiking interest rates. Lastly, let's look at what we've all been waiting for, the federal funds rate compared to the CPI. Whenever we have a massive inflation problem, we know that the Fed needs to raise the federal funds rate above the CPI. Well, we're finally here. The CPI is currently at 5%. The federal funds rate is at 5%. On May 3rd, the Fed is very likely going to hike the federal funds rate to 5.25%. Barring anything crazy happening, it's almost guaranteed. We're going to be at 5.25% for the Fed funds rate. CPI is at 5. Well, on May 10th, the new CPI will come out. We'll drop below 5, and then again in June, and then again in July. So CPI will be at 3, and the Fed funds rate will be at 5, which is what the Fed has been waiting for to see. That CPI report below the federal funds rate, it has at least shown the Fed that they've accomplished a majority of their goal. Let's not get discouraged. Let's continue to watch the data. We know over the next 3 months, we should possibly see a relief in interest rates.